Welcome to Trading Lounge and the Bitcoin report for Thursday, September the 15th. We're on a weekly chart here, and I just want to point out the bigger picture. So if we do make new lows below this wave 3 here, which is certainly the case, which appears to be a bit of a certainty because of this move down through here being in 5 waves. So we'll probably end up making new lows as wave 5, so 1 and 2 and 3 and 4 and 5 coming down here lower. Now this 5th wave here, this 5th wave will be shorter than wave 3 here, because wave 3 is actually shorter than wave 1 here, because wave 3 in Elliott cannot be the shortest structure. So that means that wave 5 here needs to be shorter. How far we go down, I don't know. Look, maybe 15,000, maybe lower. But all I can do is just continue to count the structure to the downside here. So if we also get 5 waves down here, then in Elliott that means we get a 3-wave counter trend, and then another 5 down here. So this will take us down, you know, into the 10,000, the 8,000, the 5,000, God knows, you know. Yeah, that's sort of where we are. We're in some sort of large A, B, C correction. Now, I know some folks will look at this and go, well, Pete, this will be the A wave here and the B wave over here and the C wave over here, and then we're going to go up here as being bullish at that point. That's just not the case, because it's not what the pattern that we'd be seeing in the US stock market. And as you know, the Bitcoin market is being treated like a tech stocks. You know, when you've got, you know, machines like Goldman runs, you know, all its machines, and the other banks as well, all competing for efficiency, inefficiencies in the marketplace, then you know, they've bottled it up into that space. Anyway, that's just the basic structure, not a big deal. Let's just go into the daily chart here and just pick it up from that wave 4 here. So from wave 3 to 4, we're looking at wave 1 and 2, and then we're looking down for wave 3 here. Wave 3 will be in 5 waves, so wave 1 here, wave 2 here, wave 3. It should scoot along pretty quickly here and sort of shock everybody. And then wave 4 and wave 5, they'll probably blame it on the Ethereum merge or something like that. But that's the way it's been treated. So look, I don't pay any attention to the 10,000 or the 15,000. All we'll do is just count the wave structures down, okay? But you know that, you know, it's coming lower, you know. So and then we'll be into a larger corrective rally. Maybe the Ukraine war sort of slows down at that period, or some, you know, some other thing or something. Yeah, so then we'll have some sort of rally in here. So that will be a bit of a breather, but it will be a sucker play because we've got 5 waves down here. We'll get another larger 5 waves down here, taking this low out here. Let's go in and have a little look at this area here on the 5K, I think we're at, wherever that is, up here. So in this instance here, we've got, just need to get some bearings for you here. So that's the wave 4, and we're counting down here for wave 1, an A and a B and a C, just like the US stock market is. And then we're looking down here. So here we're looking down as wave 1 here, an A wave, a B wave, and we're looking for 5 little waves up just above the 21,000, and then we're going to come down and work our way lower through like a ball bouncing off this level here. We first bounce is the highest, second bounce is lower, and then lower again, and it will eventually lock under the 20,000 and then drop lower at that point. There will be, you know, around the 18 and the previous low here around this red line here. There's also going to be support here as well, but we will be moving lower still in that regard. So we've got 1, 2, 3, 4, 5 in blue here for the 3rd wave. So we've got wave 2, wave 3, wave 4, and then wave 5 down here, wherever that. So don't pay any attention to this. You know, I mean, I could do Fibonacci targets and all the rest of it, but we'll just count the structure as we go, because we don't know how, you know, how they're going to be driven. But the norm would be this wave 1 here, this length of this wave 1 here, so we can take it from here to here, just roughly speaking. We would need to see wave 3, if I can get my fingers doing their jobs. So that should be down here further for that. So at least down to the 1650 at that point. That's that'd be the minimum. You know, the ways of doing this really are just looking at taking the length of wave 1 here. So I'll just put it just there. That's basic. Oh, whoops a daisy, wrong job over here for that. So that goes there. So we can just bring that down to here, roughly. So roughly we got the length of wave 1 here. You can do your homework on that. And then we can bring that over here and stick it on the top of wave 2. And then we can come down here, and then we can look at this 61.8%. So wave 3 here can come down to the roughly the 14,000. But, you know, I mean, I do this all the time, and, you know, sometimes it gets it perfectly, and other times it's so wrong it's just makes you not want to do it again. So, but anyway, just for the folks that look, it'll probably be perfect, you know, and I'm whinging about nothing. But my mother's English, my father's Australian, so being my mum, he's whinging Pom, which he's not. She never whinges. She's fantastic, but we can have a bit of a grizzle now and again as you get older. It's your right to be a little bit crusty and grumpy. Kind of enjoyable, actually. Okay, so anyway, that's that. Let's just have a quick look at Ethereum for a moment. So Ethereum here, we can remove that. Well, we'll leave that wave A there, but wave 3 and 4 here, then 1 and 2 and 1 and 2 and 5 waves down, 3 and 4 here. So, you know, buying Ethereum around the 500 mark, when everybody else, because the news media down here is going to be like wicked, isn't it? You know, it's like the end of the end and all the rest of it. But that's you know, when there's blood on the street, that's the time to buy. So I'll leave it at that for today. Thanks for tuning in as usual. Cheers.